for perspective, as you had said, the earliest Category 4 in the Atlantic since 2005. And 2005 was one of the worst hurricane seasons on record.
Was that Katrina?
Katrina was one of those storms in that year. So right now it's early. We're looking at it. It seems to be. I always look at it, is it going to impact the United States, right? The islands obviously matter, but generally for global insured losses, something on Florida or, in Texas, Louisiana, those are the kind of big money loss events. What it looks like is going to happen here is it will probably hit the Yucatan Peninsula. It will probably cross a lot of the islands in the Caribbean south of the Greater Antilles. But so we're looking at that, and we're looking at past events in Mexico. In 2005, there was also Wilma hit Mexico and caused almost $8 billion in economic losses. The insured were a lot less. I do think Beryl's going to slow down, though, so it probably wouldn't be that bad.
What's it tell you, or what is it the insurance company's telling you about kind of how they view hurricanes, other extreme events thing? It's always in the news here, extreme heat, extreme storms, extreme. What do the insurance companies say? Because they're the ones that actually have money at stake here.
Skin in the game on it.
Skin in the game.
So what they will say is climate change is having an impact. You wouldn't directly blame all these things on climate change. It's very hard to exactly say. One of the good things about the global industry, though, is that it reprices on an annual basis, right? Generally, all these policies are written every year. So they can reprice things as they go along. They could leave regions as they go along. You are hearing these record-breaking things. Even last year, which turned out to be a mild hurricane season, there was a bunch of activity earlier in the season.
So based on that, what the areas in the U.S., for example, that are exposed to these kind of intense changing storms, are insurers still insuring houses there? Like, are they still doing the job, or has all the stuff changed? That was a really intelligent question. Are they doing the stuff, or has the stuff changed?
Some stuff has changed, some stuff hasn't.
There we go.
The insurers are leaving certain areas, mostly California, honestly. The Florida market.
Interesting. Is that wildfires? Because
yes, wildfires, and the regulation is tough in some of these states too. So what you saw in Florida was a litigious environment that was driving up a lot of costs, and insurers and reinsurers pulled out of there. The state has done a lot of things to address that. So you see insurance companies actually tending to start to go back.
Didn't Warren Buffett go back?
So Buffett, Berkshire's reinsurance unit had a big bet on Florida last year. We don't actually know. They disclosed it at the annual meeting last year. They didn't talk about it this year necessarily. So we don't exactly know if they're there. I would suspect they probably are, but I can't confirm.
Okay. So, but if I want to go out and buy a condo down in Florida on the coast, can I get that insured?
You can. What is happening, you probably won't get it insured.
I'm not doing it, by the way.
In case you're wondering. You can. It will probably be through a Florida company, like a smaller insurance company. You're probably not going to get, you might get an Allstate, I don't know. But you're not going to get one of these probably national name brands. You'll probably get a smaller company. You're definitely going to pay a high price. You may even get it through the state fund. So Alex, to your other question before, one of the things that is happening is that there's an insurer of last resort in a lot of these states. So it's essentially the state insurance company. It's not. It's an insurance company, so it's not like just backed by taxpayer money. It's supposed to be self-sufficient, but it can always rely on the state. So a lot of people will end up getting insured through those mechanisms.
What about reinsurance?
So the reinsurance market really, I think, is returning to Florida. So these things that were hurting it, it's kind of a wait and see. The prices went up a lot, especially for catastrophe-prone regions, stuff like Florida. So it became, to Paul's point earlier, it became attractive to some companies like Berkshire Hathaway to get back into these markets.
How are these property and casualty stocks trading? Are they trading on the fundamentals of each company? Or are they trading on, or do they typically trade on interest rates? How do they trade?
So the P&C companies trade less on interest rates than life insurance companies. The life insurance companies are way more levered, assets to equity. They have bigger portfolios. These names, they'll tend to move on the pricing in the cycle, sometimes the weather. Interest rates will help. They're kind of in line with the market this year. Some have done better, so the auto insurance companies are doing a little bit better. We probably talked about that in the past, but they were having huge increase in loss costs, so cars were more expensive to fix, and that is kind of abating a bit, so those names have done better.
What about rates? So Fed cuts interest rates. How does that affect the insurance market? And does it matter as much, considering that some of these places are going to get hit no matter what because of all the changing weather?
So it won't matter on the underwriting side much. Potentially it could, in that interest rates they help investment income, which could subsidize underwriting. But realistically, lower interest rates will hurt investment income. Depending on how low they go, maybe not dramatically. It probably does not change underwriting decisions, though. But net, lower rates are a bad thing for these companies.
All right, if I'm buying property and casualty insurance stocks, what kind of dividend yields am I getting on these things?
They're not dramatically high. I mean, they're probably less than what you'd get on the S&P. I mean, it's 2 or 3%.
Yep.
I don't think they love to be locked into returning capital, so they'll favor share repurchase instead.
And are they doing that?
Yeah, I mean, they're buying back shares. They'll tend to pause during hurricane season. This is by some estimates, quote, the hurricane season from hell coming up.
Oh, great.
That was a headline. I don't know if it was clickbait or not, but it was a headline. So you may see the second, third quarter repurchase slow down, but that's usually the main mechanism.